Okay. Devin, stay with us. We have the management of Dabur now joining us to take us through some numbers, and they just reported earnings. Mohit Malhotra is CEO at Dabur India. Mohit, good afternoon. Great to have you with us here. Prashant this side. Revenues are in line. We're looking at the operating profit, which is in line. Margins, I mean, almost exactly in what the market was expecting. Volume growth maybe even a little better. Volume growth expectations were between 3 and 4%. You've done 4.2%. So if I can begin by asking you to sort of characterize the kind of growth that you've seen and also guide the market a little bit about what FY25 really holds across segments, healthcare, home and personal care, oral care, and others.
Yeah, hi, Prashant. Thank you for having me. So I think overall results has been above our expectations. So I think the big thing is that volume growth is around 4.2, like you rightly mentioned, and volume growth is being underscored by our rural performance, which has been very high. So our business has grown actually 8% in rural and 4% in urban. So there's a 400 basis points of difference between rural now chugging better than what it used to be. Actually, after a span of 3 years that we've seen rural ahead of urban. And syndicated data also mentions that, and it's also very evident in our tertiary and our secondary numbers also. Partially it's got to do with the rural prosperity kind of inching up and infrastructure investments of the government yielding results in the rural, and also base effect kind of going away. And going forward, I think rural will drive the growth because urban is navigating a little bit of high basis of last year, and e-commerce and modern trade are also kind of going through a lap over now. So I feel there are green shoots now in rural. For the first quarter, as I told you, in almost like 30 quarters, 13 months is what we have seen, rural kind of coming back. So I'm pretty hopeful on that. As far as categories are concerned, our oral care business is doing exceedingly well. We're gaining market shares of around 20 bips in oral care, and the business has grown by around 24%, driven by our Dabur Red brand. Then our hair oil business has also gained market shares. Our Chyawanprash, honey have also done very well. Our beverage business was a little bit muted on account of unseasonal rainfall which happened in the summer season. So I think we are pretty well prepared going forward in the future, and we will be delivering because now the price increases are over because of the deflationary environment. So most of the growth will have to come in from volume growth. So we expect high single-digit volume growth coupled with maybe 2-3% of price increase. That's about it. And we are targeting low double-digit kind of growth going forward next year.
All right. Hi, Mohit. Very encouraging to hear that rural has suddenly come back into picture. I've been speaking to you for the last few quarters, and every time you say that, rural is a little bit sluggish. But this time around, as you're saying, well, things are looking up. A couple of questions then. If I got that correct, you said that the volume growth will be in high single digits, right? With price increase of 3-4% for FY25.
Yeah, so we will have volume growth of mid to high, and with 2-3% of price increases. Nigel,
okay.
That will vary in different categories. So in healthcare, we expect a 3-4% price increase. Beverages around 1%, and HPC, they're about around 2-3%.
Okay, all right. What does it mean in terms of margins, Mohit? Because as you've said, you'll spend a little bit more on advertising and promotion as well, so that proportion could move up. But your goal is to take margins to around 20%. So in the near term, how would it look? FY25, what kind of a margin number you're looking at?
Yeah, so in medium term to long term, we expect the margins to actually improve, Nigel. If you look at my guidance for last year, we guided for around 19.5% kind of margin, and we are around 19.4%. So we have delivered as per our guidance for last year also. Going forward, we are undertaking a lot of Smriddhi initiatives, the cost-saving initiatives across the value chain in the company. As we speak, we're working with actually a consultant for a lot of cost optimization efforts and activities. And by virtue of that, I think we should be improving our operating margins going forward. Like if you look at the advertising cost, full year last year, we've grown advertising by around 30%. Now, next year, this advertising growth will not be 30% growth. On a 5% top line, we've grown 30% advertising. Next year, going forward, it will be in the double digits or a high double digits because you want to inch up the percentage advertising to the total revenue to keep demand, resilient. So I think that will all help us in improving our operating margin. I can't give you exact guidance how much it will be, but I think we should be around about 20-odd%, yeah.
Okay, so margins of around 20-odd%. And Mr. Malhotra, hi, good afternoon. Your ad spends, which have started inching up, do you intend to go to that level of 8 to 10%, which you have spoken of in the past?
Yeah, so it's already around more than 7%. So we want to take it up to around 8%. And if advertising spends grow ahead of the revenue growth, it will. And that's what our endeavor will be, to take up advertising spend to that level.
You know, just a word, you mentioned the toothpaste. So I just want to mention here as a happy customer. I thought, maybe I'm in the minority, but clearly not, because that's a category that's doing very well for you. Do you see that as a sustained pace of growth? Because it's been your best performing category. And what are the factors driving it? I mean, is there some price increase or is it all volume growth? And what's the expectation there?
Yeah, so if you look at oral care business is growing. The category is also growing at around 6-7%, although our growth is around 23-24%. And this growth is driven by the herbal category growing ahead of the non-herbal category. Herbal category is 200 basis points ahead of the non-herbal category. It's already become around from 30% to 31%. It's growing, and Dabur is driving the herbal category with Dabur Red at one end, Babool at the economy, and Miswak at the premium end. And Dabur Herbal Toothpaste is a new launch that you guys have done. So we have all the price points in the herbal category, which is what we are driving it as a leader. So I think that differentiated proposition in the whole market is helping us getting more consumers. And there is a wave for back to nature, which is actually happening. And it's just not in India. I think it's globally that is the wave. And we see our herbal toothpaste franchise, even international, doing very well. So we'll be steadfast on this approach and owning the herbal category as a leader and driving it. I think that's the single differentiating factor.
Mohit, a quick word on the international business and the outlook for it in FY25?
Yeah, so international business has been mixed picture for us. While in constant currency terms, we have grown brilliantly. Well, for the full year, it's a 16% constant currency growth that we've got. For the quarter also, we've had a 12% constant currency growth. But there are some markets like Egypt and Turkey where steep currency devaluations have actually dented our translated growth in INR. So as we lap over the currency depreciations, I think things will become better in terms of translated. But in constant currency, we should definitely deliver a double-digit growth, mid double-digit or maybe a high double-digit growth in all respective international markets. Like Turkey business has grown by around 40% for us. Egypt business around 60% in local currency. Our SAARC business has grown by around 8%, and about Sub-Sahara around 20% growth. So I think internationally, overall, we are okay. But for one business, which is, say, in the US, which has not performed up to our expectations, this is because of the relaxer category not doing very well in the US business. But Sub-Sahara of Namaste business is actually doing well for us, which is growing double digits. And we expect the same growth to continue next year.
Got it, Mr. Malhotra. Thank you very much for joining in and providing us with some inputs and some color on the Q4 performance and the trends as you see them shape up in FY25. Really appreciate it. That is Dabur India. They've been, of course,